Welcome to the Transparent FX Academy. In this video, we'll be making a multi-time frame analysis breakdown. So taking a pair, making a multi-time frame analysis and checking the order flow for it and seeing where we can actually be capitalizing on the next moves, which are the best areas in which we can be looking for a good risk to reward opportunity on it. And the point of the video is to share with you guys which are the best and most important things that you're actually supposed to be considering when you're developing a strategy. So which are the key elements that you're supposed to be incorporating in your strategy and that you have to have clear rules for. So if you're new to the channel, I'm a top author on the TRADINGVIEW platform, and I also run an educational program as well as swing trading full-time with my students. And I invite you to check the video until the end. Okay, so what kind of situation we have at the moment on GBP CHF? A very interesting pair to follow. So let's make a multi-time frame analysis, see how we can be capitalizing on the moves on this pair, and I will try to make this as educational as possible. So let's start from defining what kind of situation we have here from a daily perspective. Now on the daily time frame, what we have, a market that has basically made this very nice push to the downside, then made a minor push up, push back down, and then when the market created a higher high, so broke above this high, what kind of pattern the market actually formed? It formed a W pattern. Now after a W pattern, what do you expect? You expect the market to go back down and retest the previous resistance, which will be then turned support from a daily perspective. So basically the completion area of the pattern. So that is why you expect the market to go and reach this area. So immediately from a daily perspective, we clearly know that our downside target is exactly here. We want to see the market reach this downside target. And our job at this point is to basically determine how we can position ourselves with a good risk to reward and good probabilities for this push to the downside. Now, if we look at the structure, okay, what do we have? After this move to the upside, what did the market do? The market basically started to show some deceleration. So it started very, very aggressively, and then basically sellers continued to enter the market, and the market decelerated, and then it broke the structure to the downside. Now let's zoom in to show you guys what does it mean basically broke the structure to the downside. You can see that the market from here went up, went back down, so found resistance at this area, then broke back above, and what happened? The market at that point, this previous resistance was turned support, therefore acting as support. But when the market broke that support to the downside, we say that it broke structure. Why? Because it broke the support, which is now turned resistance. Therefore, the market is now in a bearish, it has bearish structure, so is in a bearish market. And after that, what happened? The market made a retracement and is currently retesting this previous support, now to resistance. So retesting structure, and in fact, it has already shown a reaction to the area with this red candle. Now, if we go and see what we have from a COT perspective, so what hedge funds are doing at the moment on the pound, what we can see. Now, the first thing that immediately basically we can notice is that we were all the way up. If we look at the net positions, we were all the way up at 35K net positions, going down all the way with the last report that was basically given to us yesterday at minus a 1,380 net positions. So basically, for the first time since a very long time, we have more short positions than long positions from an institutional level in the market. So speculators in the market, for the first time since very long actually, are positioned more to the short side rather than the long side from a pound perspective. So does this correlate well with what we want to see from a technical analysis perspective, from a price action perspective? Absolutely yes. Just a quick reminder, make sure you comment below and you let me know which pairs you would like me to cover in the next video. What we can see with the last report, they added 3.8K short positions and closed in another 760 long positions. Now, if we see what we have from a CHF perspective, we can see that overall net positions definitely increasing a little bit with the last report from 4.6k to 4.9k with some longs open, actually 1,123k longs opened, bringing long positions from an institutional level at 12,731 and shorts also a little bit opened with 7,807. So CHF getting a little bit stronger and GBP definitely getting weaker. Therefore, what we can expect from a GBP CHF perspective, we can expect to see the market react to the structure and make a move to the downside. But trading is not predictive, okay? We can't predict that the market will make this move to the downside. Our job as traders is to react to what the market is showing us. So I will show you how to do that. Now, if we look at what we have from a weekly perspective, it is the last time frame that I will show you from a directional perspective, because on the monthly there is not much to be taken, but there is two extra confluence factors that we can take from the weekly time frame. So I want to show you from a weekly time frame what we can see. We can see that the market created this beautiful impulse to the downside, very long impulse and a strong impulse to the downside. Then the market started this retracement at the beginning quite aggressively. You can see that the first candle to the upside was very aggressive, but then what happened? The market started to decelerate, and then what happened? The market created this red candle here. Now, I made a video on this specific candle, which you will basically find this video linked here or here. So when you see a candle like this, and you will learn basically how to spot and read this pattern and why it works basically in that video. So go and watch it. Basically, what is supposed to happen with the next candle? What happens most of the times? Because trading is a game of probabilities. What happens most of the times? The next candle will fill in this wick, okay, and make a move to the downside, therefore bringing more probabilities for this push down. So this is one of the confluence factors. The second confluence factor is that after an impulse and a correction, what do you expect? You expect the market to continue with the move to the downside. So extra two confluence factors from a weekly perspective. So weekly indicating for a possible move to the downside. Daily indicating for a possible move to the downside, both from a pattern and structure perspective. COT data showing that we can be looking for a push to the downside. We have just seen GBP getting weaker and CHF getting a little bit stronger. So is it a good idea to be monitoring price action from a lower time frame perspective for a possible short position? Absolutely yes. And that is exactly what we will be doing with students. Keep in mind, monthly, weekly, and daily are for direction. When you're looking for an entry, you have to go on the 4-hour time frame. It's the most accurate time frame for entry. So what we will be doing with students, as soon as the market will open, we will already be monitoring price action on the 4-hour time frame inside of this region, waiting for what? At the moment, from a 4-hour perspective, there is no entry. If the market will remain like this, we can't be taking a short, and what will probably happen if the market will remain in this situation from a 4-hour perspective is that the market will just break to the upside and the setup will fail, which is perfectly fine because we are not in the trade, therefore we have nothing to lose. We will just adapt to the new market structure, and as traders being always adaptive to the ever-changing market conditions. But if from a 4-hour time frame we will shift from a bullish market to a bearish market, and the market will provide to us one of our valid entries, then we will be entering the market with a very good risk to reward, at least 1 to 3, because that is what gives you an edge in the long term in the market for this push to the downside. So with a very good risk to reward and very good probabilities for the move to the downside, because we have taken our direction using all confluence factors from a monthly, weekly, and daily time frame perspective, and then we have also waited from a 4-hour pattern, from a 4-hour time frame perspective for one of our entries, which are high probability entries that give us the best risk to reward in the market with a protected stop loss and obviously take profit taken from higher time frames. Now, obviously I can't share my rules for entry that is part of the mentorship program, but I suggest that you monitor with the rules of your own strategy, and I suggest that you have one. If you don't have a strategy that is completely rule-based, then you definitely have a problem, but I suggest that you monitor this pair for this possible push to the downside, as usual from a reactive perspective and not predictive. At the moment, there is no entry from a 4-hour perspective, but an entry might come during the week. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free education and analysis for all of you, as well as going and checking out the mentorship program. You find the link in the description. It's a very complete program where you first get all the rules of my strategies and then you trade them live with me each and every day with entry, stop, take profit, as well as having me answering any question that you have each and every day. So we'll invite you to go and check it out. The link is in the description, or go and check out the next video.